Hello, my name is Jonathan Tsang,
And my name is Kimi Basamakov.
and we are juniors at Westlake High School in Southern California. Today, we are presenting a comprehensive technical analysis and investment pitch for Alphabet, the parent company of Google, making a buy-to-hold recommendation. We will detail how Alphabet's diversification, digital advertising engine, cloud computing infrastructure, and investments in AI and quantum computing create substantial growth potential and strong shareholder returns.
Alphabet is a global technology powerhouse based in Silicon Valley, though its services extend across all major international markets. The company delivers a wide spectrum of internet services, though its core search engine and YouTube platform are most prevalent, but also has cloud computing, productivity software, quantum computing, and consumer electronics. Alphabet's revenue model is primarily driven by digital advertising, especially through Google Search and YouTube, complemented by strong contributions from Google Cloud and hardware products.
The leadership team brings deep experience and stability. CEO Sundar Pichai, with 21 years at Google and 9 as CEO, played a key role in developing Android. Ruth Porat, President and CIO, is Alphabet's longest-serving CFO and former Morgan Stanley CFO, known for driving financial discipline and strategic growth. As of April 1st, 2025, Alphabet's stock was trading at $157.07. We've established a target price of $252.56, reflecting a significant upside potential. Based on our valuation models and confidence in Alphabet's growth trajectory, we're issuing a buy recommendation.
Google search revenue is effectively a function of two variables: the number of searches performed and the rate at which users interact with ads. Both have shown consistent growth. Over the past several years, global internet penetration and digital engagement have steadily increased, particularly in developing markets. As a result, the total number of Google searches has grown at an 8.2% CAGR between 2019 and 2024. During the same period, internet users globally expanded at 6.2% annually. Importantly, Google continues to command over 90% of global search engine market share, a position that is both defensible and scalable. This dominant position allows Google to extract greater ad revenue per user as usage increases and monetization techniques improve.
Alphabet recognizes this long-term secular tailwind and channels the cash flow into strategic areas, from maintaining its dual-class voting structure to protect long-term vision, to funding global infrastructure and investing in early-stage technologies through its other bets segment. Despite already handling around 5 trillion searches annually, Google still operates at less than one-third of the estimated total addressable market of 17 trillion searches per year. Based on a conservative growth rate of 0.8 trillion additional searches annually, search will maintain over a decade of continued expansion. This gives Alphabet ample headroom to continue compounding ad revenues without relying on market share gains, just following trends of global digitization and increasing engagement. The cloud market is in the midst of a structural transformation. Enterprise IT strategies are shifting towards cloud-first and hybrid architectures. This is driven by the rise of remote work, the surge in data storage needs, and the demand for real-time analytics and AI-powered decision-making.
Currently, the market is highly consolidated. Google Cloud competes in an oligopoly with Microsoft Azure and AWS. Together, these three control 68% of global cloud infrastructure spend. Despite the third player, GCP has distinct competitive advantages and continues to gain traction through its flexibility. GCP is investing heavily in multi-cloud compatibility, which caters to enterprise clients looking to reduce dependency and instead leverage capabilities across platforms.
As shown in the revenue composition chart, advertising remains the dominant contributor to Alphabet's top line. However, from 2019 to 2024, the cloud segment has consistently expanded its share. Cloud revenue brings recurring contract-based cash flows, which are less volatile and more predictable than advertising cycles. GCP is becoming more a strategic lever for Alphabet by offering expansion potential, diversified revenue streams, and long-term relevance in enterprise IT.
Alphabet has consistently delivered strong shareholder returns through disciplined capital allocation and operational efficiency. With operating margins around 27% and the recent introduction of a dividend, alongside an aggressive buyback program, Alphabet is signaling confidence in its cash flows while beginning to reward investors more directly. These moves mark a shift from pure growth mindset to a more balanced capital return strategy.
Financially, Alphabet maintains a low debt, high liquidity balance sheet and operates with lean working capital. Its dual-class structure enables long-term investment in transformative areas like AI, quantum, and cloud, and shield them from short-term market pressures. Overall, Alphabet pairs strong near-term returns with long-term strategic upside, making it a compelling long-term equity story.
As economies transition towards knowledge-based production, investment in intangible assets has steadily outpaced tangible investment since 2016, even during periods of economic uncertainty. Firms like Alphabet, whose value is built on algorithms, cloud infrastructure, and proprietary data, are well positioned to outperform across economic cycles.
Alphabet maintains a dominant grip over global information flow, particularly through Google Search. Its brand strength translates across advertising and cloud, reinforced by massive scale advantages. In cloud infrastructure, Google's operational footprint and AI capabilities make it virtually impossible for new entrants to compete on cost or performance.
What truly differentiates Google is its full stack integration. The company designs its own hardware while also developing and maintaining the entire software ecosystem, from search algorithms to the Chrome browser and Android OS.
This vertical integration reduces reliance on third parties. By controlling everything from silicon to service delivery, Google can deploy AI solutions faster and at a greater scale than any competitor. Alphabet's structural edge lies on its ability to convert intangible capital into scalable, defensible value.
Alphabet faces several key risks, competitive threats in search and advertising, as well as ongoing regulatory scrutiny, but has clear strategies in place to mitigate them. In search, niche engines like Bing and DuckDuckGo are gaining traction, while Google's own AI tool, Gemini, could disrupt its ad click model. Google is addressing this by integrating ads directly into AI interfaces, aiming to preserve monetization as search engine evolves.
In advertising, competition from Amazon and Meta is rising, and short-form content platforms like TikTok are drawing users away from YouTube. Google is responding with YouTube Shorts and leveraging its edge in search intent-based advertising, which remains harder to replicate.
AI is at the center of Alphabet's future strategy, driving efficiency, scaling infrastructure, and expanding market reach. Google Cloud is integrating AI across its platform, with in-house tensor processing units, or TPUs, powering compute-intensive workloads. With the TPU market expected to grow at a 32% CAGR through 2030, Alphabet is well positioned to lead in AI infrastructure. The company is also investing in quantum computing, aiming to support future AI models that require exponential processing power.
On the consumer side, AI is transforming how users interact with Google services, from search to content creation. As new hardware formats emerge, continuous model training will be essential. Google's end-to-end hardware control ensures these updates are efficient and competitive. Privacy remains a key limiter. Google prioritizes user data protection, which slightly constrains AI monetization and ads, but enhances long-term trust. In short, Alphabet's full-stack AI strategy across cloud, consumer services, and hardware positions it to lead the next wave of the digital transformation.
Alphabet's ESG posture is becoming increasingly important, not just as a reputational asset, but as a strategic buffer against legal and regulatory risk. On the environmental front, the company is committed to net zero waste, carbon neutral manufacturing, and full water replacement by 2030. Socially, Alphabet continues to invest in diversity and accessibility, with 2024 initiatives targeting minority development and the expansion of its Accessibility Discovery Center.
However, governance remains an area of underperformance, as reflected in its comparatively low ratings from MSCI and S&P. This is contributing to stock volatility and investor hesitancy, especially in light of Alphabet's ongoing antitrust litigation with the Department of Justice and potential contract risks with major partners like Apple. Still, Alphabet has invested close to $20 billion in ESG initiatives since 2020, and if governance practices improve, the company will be well positioned to meet stakeholder expectations while maintaining long-term resilience and trust.
In conclusion, Alphabet Inc. presents a compelling investment opportunity due to its unique blend of digital advertising dominance, technical leadership in cloud computing, and pioneering AI initiatives. The company's robust financial performance, efficient capital allocation, and fully integrated technology stack provide a solid foundation for long-term shareholder value creation.
For investors, Alphabet stands as a strategic buy-to-hold investment.